Let's talk about all those phone calls we mentioned at the beginning that you're getting. People wanting to escape the banking system. I've spoken about it in past interviews. This is a trend that I'm seeing more and more. Loss of trust in the banking system and loss of trust in the dollar, in fiat.
In fiat, yeah.
People want ways out. Now, with the talk of inflation, obviously, this debate of whether gold is the ultimate inflation hedge has been reignited, with people on both sides saying gold has failed as an inflation hedge over the years, while they're saying no, it is the ultimate. Where do you fit?
Well, of course, gold has this history of over 2,000-3,000 years. And if you study history, gold always kept its purchasing power. There's no debasement of gold. And of course, you have cycles, and you can buy gold at the wrong time, and then you go down 40%. But if you look on a longer term, you'll never lose your purchasing power with physical gold. That has never happened before. And what we know from gold is being revalued once in a while, but it can take a few decades. We had such a period in the 1930s. We had such a revaluation period in the 1970s. We had one between 2000 and 2010. And I think we had a mid-cycle correction in the last few years. And now gold will restart this revaluation process. But we might wake up one day that central bankers choose to revalue gold to a much higher level, because that as said, that can help their balance sheet. But if you compare gold to Bitcoin, and I've been calling the Bitcoin digital gold since 2014, I was stupid enough not to buy Bitcoin. I only started in 2018, but I prefer Bitcoin next to gold because Bitcoin is the fastest horse in the race. It's a new horse. It's a young horse. It can run faster, but it shouldn't be a fight between gold and Bitcoin. It should be a fight between Bitcoin and fiat.
Right. Know? Like they're fighting the same fight, you're saying, gold and Bitcoin.
Yeah. They're friends, they're neighbors, they're nephews.
Different way to look at it. Interesting, because the argument I hear is, yeah, gold may have worked in the 1970s as an inflation hedge. That was great. But the Bitcoin is that hedge today.
No, but look, with gold is up over 30% since last year. Gold was trading $300 20 years ago when I started to invest in gold. So you keep your purchasing power. So gold is like an insurance for your net worth. But with Bitcoin, you can become rich. I was in the south of Spain last week visiting some real rich investors who are in our fund and wanted to meet me and play golf. It was very nice. But these guys all have too much money and too much time, and they're over 60 and 70. None of them is in Bitcoin. They don't understand it. But they don't need to, because they became rich by investing in companies, in real estate. But the younger generation, the younger generation can only become rich by investing in something like crypto now, which the old guys don't understand. So it's very it's very honest.
Why do you? That's an interesting. And by the way, I like how you said too much money, too much time. Isn't that a nice problem to have?
Yeah.
Why is there this philosophy, especially amongst the young, that they see crypto as the only, or meme stocks as the only way to get rich today? Is it because the corporate ladder philosophy is out the door, that cost of living is too high, that you can't just have a 9-to-5 job to become wealthy anymore?
I think there's a certain wisdom among the younger generation. They don't understand it themselves, but they feel it's the next big thing. And we, or I should speak for myself because you're much younger, but our generation of boomers, we don't feel it. We have to study it. Somebody has to explain it to us, and then we might try and step in a little bit. But the younger generation, they feel it naturally. It's the sign of the times. It's the zeitgeist, like the Germans say it. They feel it. You have the fourth turning. Every 20 years, you have this new generation which have different beliefs
Yeah.
and which have different ideas. And we saw this in the 60s with the flower power. So it's a new generation and they feel this is the right way.
So to that point, Willem, for yourself, obviously you have embraced the cryptos. You are someone from the gold realm, but have embraced the crypto.
It was hard.
It was hard, but you got there. You got there. Is it just Bitcoin for you? I mean, we hear the chatter, or you got to look at Shiba Inu. That's the next one. Cardano's the next one. How do you break it down? Are you open to the other cryptos? What's your philosophy?
Today, I wired $250,000 for an investment in a very unique fund, which is fully dedicated to DeFi, decentralized finance, which is connected to the most important venture capital funds in the US, who invest in the platforms which will be very disruptive to financial systems.
Can you name it?
No, I won't name it because
right.
But we saw this huge changes, with Uber and Airbnb, and they changed it. They changed a lot of things in very old business models. And when you look at the financial industry, the way we settle and clear stock trades, it takes 3 days. If you want to transfer money internationally, it takes 3 days. So you've got these bright guys now building platforms, and they say, hey, wait, guys, look, it can be done much smarter. We'll use blockchain. We'll use smarter systems. And that's what we call DeFi, decentralized finance. And I think this will be huge because the financial system still operates like 100 years ago, the plumbing system of the financial system, like the clearing for stock trades. You have to wait 3 days.
Okay, and fair enough. I won't keep pestering you about what you invested in, but because the folks at home, our audience is equally mixed, crypto and mining precious metals. We mentioned the miners before. You say there's still a lot of value there to be found. Any insights, okay? Because obviously there's so many companies, just like the crypto world, there's so many companies you can choose. So what are the top 3 things someone should be looking at that's key for you? What are the metrics that you need to evaluate to know, hey, this one has potential?
We focus on small companies being responsible for large discoveries. So if you make a copper discovery now or a nickel discovery, you will do well. And we love to invest in companies who don't produce the metal, because if you produce the metal, at the end of the year, you have less ounces in the ground left than at the start of the year. If you invest in an exploration company who's drilling and finding more, at the end of the year, you'll own more ounces in the ground than at the start of the year.
And you like the royalties, I assume?
Yeah, that's what we have as the safe part in our portfolio, because the valuations are a little bit higher if you look at Franco-Nevada and the Royal Golds. But they tend to be very safe because the institutions like the pension funds, if they want to enter this mining industry, they almost only can buy the major producers and the royalty companies. And the royalty companies have such a wonderful business model. That's why they're loved by institutional investors. But their valuation is quite rich. Sometimes their valuation can be compared to the cheaper tech companies. But if you go to the smaller ones like Sandstorm, the valuation of Sandstorm is half the valuation of Franco-Nevada.
I want to bring it home with this. So for the folks at home who are looking at their bank accounts, looking at the fiat system, getting worried, right? If they're considering moving their assets outside of the bank, what discussions should they be having with themselves? How do you know if you're ready to make that move? Because it can be scary, right? We've been accustomed to the banking system our whole lives. Like, what do you mean you don't have money in the bank, right? It's a scary shift.
Well, from a legal perspective, cash in the bank, you have a claim on the bank. So from a legal position, cash in the bank is risky, especially when we'll get bail-ins. If we get a next crisis and the financial system has to be well, refinanced. You could have bail-ins like we've seen in Cyprus, and everything over 100K, you know, it could be gone. So I always advise people take money out of the system and invest it in things which are safe. If you invest money in real estate, the money's out of the system, the financial system, but it's in a very tangible, very, very safe asset. You can also take money out of the system by buying physical gold or silver and storing it in privately owned vaults. I started a company like that myself in 2008. But you can also buy Bitcoin, and Bitcoin, you can take your Bitcoin offline and put it in cold storage. So then your money is also out the normal structures, but there can be a risk because I expect more financial repression from the governments. I think the government one day might choose to close the on and off ramps to crypto, to Bitcoin, because there will be a huge fight between Bitcoin and the fiat system, especially once they roll out the central bank digital currencies. And so don't put all your eggs into one crypto basket. But I always have this model, it's 25% real estate, 25% in stocks, 25% in physical gold and silver, and then 25% there used to be cash, but now I put that in Bitcoin.
And I agree with you on that diversification front. It's just that Bitcoin maximalists would argue, well, why would you own AOL if you could just own Amazon?
Yeah, but when you get greedy and put all your eggs in one basket, you know, if you study history, what were the worst mistakes? People becoming greedy, putting all their eggs in one basket, and the basket then fell.
Good thoughts, and always a fantastic conversation with you, Willem. Come back anytime. I appreciate it.
Thank you so much, Daniel.